Welcome to another exciting edition of the Trading Bell. Today on the show, we shall be taking you to Kigali, that is Rwanda, where we'll be speaking to the Chief Executive Officer of the Bank of Kigali. And she'll be giving us some interesting insights on how the sector has performed and continues to perform. Allow me to begin by giving you the chance to just give us a quick introduction.
Thank you. Thank you very much for having me this afternoon. My name is Diane Karusisi. I'm the CEO of BK Group, the largest financial services company in Rwanda. We serve clients in banking, insurance, investment banking, technology, and we look forward to doing more with our clients in Rwanda and hopefully in the regions.
Rwanda has been a very fast emerging market when you look at economic growth numbers, and the country has also been at the forefront when it comes to rolling out very effective COVID-19 containment measures. Perhaps talk to us about how the banking industry has been performing and what are the trends like?
So it's a good question. I think this pandemic has tested resilience for countries, governments, but also for organizations like BK Group. At the country level, as you've said, government put in place very quick measure to prevent the spread of the virus. And today, when you look at the number of new COVID cases that are mentioned every day, it's quite low. It's single digit in the city of Kigali. Vaccination has been ongoing. Many of us in the bank have received our 2 shots. And so basically the government has done quite well in managing the situation. Now at the company level and the industry in general, I think the years-long efforts of banks in Rwanda in particular to keep very healthy capital levels and liquidity positions have helped us to weather the storm. When you look at the Bank of Kigali in particular, we had a quite strong capital levels right after the secondary offer that we had in Nairobi in the end of 2018. And this has enabled us to have very good capital buffers. We had very good liquidity buffers, and we've been able to support our clients in the past year or so, or more than a year now. And the pandemic has also tested our resilience in terms of business continuity. Are we able to serve our clients in stressed conditions? And I think we are happy to say that despite the exponential increase of digital transactions, we've been able to keep all our systems resilient, and our uptime has remained close to 99%. And it's something that we are quite proud of.
And Madam Karusisi, looking at the developments around the financial services sector comparable to Kenya, which prides itself for having one of the most robust financial sector. Perhaps talk to us about some of the measures that were put in place to ensure that the banking sector in your country continues to perform well. Of course, we did see some interesting reforms that were introduced in Kenya that was to cushion borrowers. Give us a sense of some of the market actions that characterize the Kigali financial space.
So that's interesting. I think in line with what we've seen across the region, the central bank issued some guidelines very early on in the crisis, waiving charges on digital channels to make sure people can access services at very affordable rates. I think we've seen the same thing in Kenya. But more than that, government set up what they call Economic Recovery Fund, which had many windows, and one window was allocated to the hospitality sector, which is quite important sector for us in the banking industry, to support these businesses weather the storm. And this came in the form of refinancing facilities at very affordable rates, because many of these businesses are still in a moratorium period. Some of them had applied for 12 months, some of them more, 12 months moratorium. And what this refinancing does for them is it reduces the level of interest accruals, and it will put them in a better position to be able to pay, to service the facilities post the crisis. Now, we are seeing already some light at the end of the tunnel. Probably, as you know, Rwanda will be hosting CHOGM, the Commonwealth Head of Government meeting in Rwanda in June. And all hotels, all my clients in the segment are now smiling because they're fully booked for that period. And they're telling me, thank you for your support in the past year. We hope that in the second half of the year, we'll be able to move back swiftly and start servicing our facilities. So that was one window for the Economic Recovery Fund. There was another window, a second window, which is as important, that was availing funding to banks at a very affordable cost for us to be able to on-lend working capital at maximum 8% to our clients. And this has allowed our clients to keep the lights on again, to keep supporting the sectors, to keep paying the employees during the crisis. And we believe these all are measures that have helped the economy recover, and we all expect a positive recovery this year. Interesting.
And expanding this conversation, of course, Rwanda has been a bright spot in terms of investments in East and Central Africa. And looking at the ease of doing business, Rwanda has been up in the top 10 in regards to a country that has been having very robust policies when it comes to supporting the business community. And in regards to this, as a bank, talk to us about how the sector has performed in regards to, of course, the COVID-19 did affect various economies in different ways. Did you see a blip when it comes to lending in your market space? And of course, you're a cross-listed bank also here in Kenya. How was business like?
So that's a good question. And I think I can speak for all my colleagues in the banking industry in Rwanda. Last year, clearly the volume of business had significantly reduced. And all of us, I can speak for my colleagues, bankers, were doing mainly business with governments. Because what is very interesting to note is that government continued with its infrastructure development and expansion plans. We have a new airport that is being constructed. It's a big ecosystem. There was a big project to refurbish, renovate, and build new classrooms across the country. So this is another big project that benefited many of our clients. So we've been able to support all these government-led projects, and this is pretty much what we've done in the past year. Apart from keeping our lights on, supporting our clients, we're doing lending to all these ecosystems around government-led projects. Now, today, we see things coming back slowly. We see new investors coming to establish businesses in Rwanda. There's another program that has come with a number of incentives for the construction and the manufacturing sectors, with very interesting tax incentives and waivers for new food processing plants, agro-processing plants. And then we believe this will offer also opportunities for us to grow in that sector. So you said that we are a cross-listed bank. That's true. We are, I think, the only cross-listed company from Rwanda to Nairobi. And this was mainly to provide our shareholders and our investors with opportunities to benefit from the depth of the Kenyan market, because many of them were complaining about custody issues. And from the day we are cross-listed, we see actually more activity in the Nairobi Securities Exchange than we see here in the domestic exchange. And we expect to see more in the future.
Interesting. Are you able to quantify this for us in regards to how deep is the market back home? And of course, what sort of level of activity are you seeing on the Kenyan side from Nairobi?
So look, it is very simple because we have most global investors investing in African equities are set up to trade in Kenya. So many of them, because we don't have international banks with the custody links that they would need, that would pass their compliance tests. If I'm a global investor, based in New York, I would want to be, to have my custody with the likes of Standard Bank, etc. And all these are not here. And that's why all of them were telling us, want to trade on your stock? We think you have an interesting story. very good performance, but we are just not able to set up. It's complicated for us to set up custody in Kigali, and our compliance department does not allow that. So all these investors have been able to set up, and already set up in Nairobi, have been able to trade on our stock.
Yeah.
And from the lowest point, at the height of the pandemic, our stock reached 12 Kenya shilling. Today it's back to 26. We still see demand on the Kenyan counter, and we are hoping to create more liquidity. Some of the big investors that we have, and we want them to see. We want to see a bigger free float to allow more activity, and we think that this is going to, make our stock more attractive for investors.
Speaking about the attractiveness of the stock, I'd like to put you a bit on the spot. I know one of the major indicators of a stock that has been performing well is on the total share price value. And would you say you've been able to grow this over time? And what does the future portend for the bank?
So you see, my job as a CEO of the bank is to deliver performance in terms of returns, in terms of market share, in terms of course, customer service, which I think over the past years we've done well. The other thing that I'm also focusing on is to diversify our sources of income as an organization. In the past 5 years, we've set up a general insurance business that has become number 2 in the market. We set up an investment bank, which is actually the only Rwandan-owned investment bank that has, for instance, participated in the listing of MTN, the largest telco in Rwanda, yesterday. I was just attending the ceremony yesterday. We have a technology, which is small fintech. So we've been able to offer our shareholders a tremendous performance and also diversification across many business lines. So now what is happening at the stock market, it's not necessarily, sometimes, unfortunately, not in 100% correlated with what's happening in the market. So in the past year of the pandemic, we've seen a crash. And when you look at even all the monies outside the global money that is invested in Africa, all of it went back to safer stocks that were performing very well in the US. And just because of that, we've seen a crash in some, quite well-performing counters on the continent. But we believe that post-pandemic, because some countries, and when you look at the way Africa in general has weathered this crisis, I think it's quite commendable, and we believe we'll start seeing some flows of, international money coming back to Kenya, to Rwanda, to Nigeria, etc. And this will provide opportunities for us to improve on the stock prices in the next couple of months.
All right, very clear explanation, and thank you for those very loaded sentiments. And Madam Karusisi, it will also be interesting to hear from you. What are some of the opportunities, especially for investors from Kenya and the greater East African region, when it comes to penetrating the Rwandan market?
So I think you said it all in your remarks. The ease of doing business is amongst the top on the continent. I think it's number 2 after Mauritius. And there are a lot of opportunities. When I look at what my clients are doing, and when I look at our geographical position at the center, if you will, of the continent, looking at west and east, I think there are a lot of opportunities. The economy is still not as sophisticated as what you have in Kenya. We don't have enough food processing companies. Agro-processing is still to develop. So I think there are tremendous opportunities. And the government is even now trying to establish another hub for financial services under the Kigali International Financial Center. They issued a new investment code with a number of incentives, in particular for companies in fund management, fintech, for pure holding companies with very attractive tax incentives. So we believe this is going to create the right ecosystem for us to thrive in the next couple of years. And again, I would tell all my peers in Kenya, please come and work with us in Rwanda. We have a lot to offer.
All right. Rwanda is open for business.
Absolutely.
All right. And as we take this conversation to another level, as we also head to the final close of this interview, And looking at matters with trade finance, there are so many gaps when it comes to financing investors, financing entrepreneurs across the region. How is the bank angling itself towards meeting the ever-growing needs of this sector? As you also talk to us about this narrative around the bank consolidation, we've seen a number of banks being acquired, others being merging in this new dispensation. How will things play out in the coming days?
So I think that's a very interesting question. Indeed, we've seen a number of, a lot of movement in the banking industry. I think in the past 10 years or 12 years, we've seen a new bank entering the market pretty much every year. So now we are seeing very interesting consolidation with KCB acquiring BPR Atlas Mara. We believe at Bank of Kigali, we believe we want to have a solid competitor, because being at the top of the market with about 35% market share, second in line, being equity or BPR with about 10% market share. I think this has not given us the depth we want in terms of serving clients and improving access to finance, because it's something I discuss very often with my colleagues. If we have 11 commercial banks, but we only serve about 30% of the population, adult population. So for somehow we haven't done well. That's why I think we are seeing some consolidation. We want to create strong banks that are able to invest into technology, invest in fintech, and make sure we can bank more people. But also we want to be able to be a bit more sophisticated in our offering. Today we don't have leasing businesses. We don't have appropriate lending for the agribusiness sector, and only strong banks with strong capital and strong networks are able to invest in these areas that are very much needed by the economy. All
right, and as we wrap it up, I'd like to just get your quick closing thoughts around matters to do with taxation, and of course, a number of entries to some of these markets have really affected quite a number of investors. What would you like to see moving forward when it comes to a regulator's side of things?
So I think we all want, as business people, we want our governments to work together. We want our economic integration to be a bit more deep, for people to be able to cross the border seamlessly. Capital, labor, we want everything, and goods and services to be able to flow seamlessly. And this requires some work around the regulations, etc. I can imagine for a regional bank like Equity Bank or KCB, working under very different regulatory regimes must be very difficult, because sometimes it's not predictable, and it's just very difficult to get around very different regimes. So that's why I think we call for more collaboration with between our government, our regulators. The good thing is the capital markets in Kenya and in Rwanda quite well coordinated, and this has allowed us to have this full fungibility between Kigali and Nairobi, which is not the case, for instance, between Kigali and Johannesburg, because we also considered the listing on the GAC. So these are things that are working and can allow to provide more opportunities for businesses on the continent. Now, for us to be able to trade across borders, we need standardizations to be uniform across the region. We need even things as simple as border posts to be open 24/7. I mean, this would just allow more goods and services to flow across the border. So we really demand more collaboration and coordination at government level.
Such a pleasure having you on the show, Madam Diane Karusisi, Chief Executive Officer of the Bank of Kigali, speaking to us exclusively here on the Trading Bell Show. I don't know how to say bye-bye in your language. Perhaps, would you like to teach me that?
Murabeho.
Murabeho.
Exactly.
Kwaheri, Murabeho. Well, that's where I want to wrap it up on this week's edition of the Trading Bell. such an interesting market to play in when it comes to the financial sector. Of course, a lot of expectations from different players across the region. Until next time, keep safe. My name is Abi Gina. Keep it locked here on KT News.